The influence of monetary policies on crypto markets. Cryptocurrencies, including Bitcoin and Ethereum, have often been touted as an alternative to the traditional financial system. However, they remain heavily influenced by the monetary policies of major central banks, including the US Federal Reserve, the European Central Bank, and other global institutions. This video explores how recent decisions by these institutions are shaping the crypto market and what their short and long-term impacts are. Monetary policies, including interest rate changes and quantitative easing programs, directly influence traditional financial markets and, by extension, cryptocurrencies. During periods of accommodative policy, low rates favor speculative assets like Bitcoin and Ethereum as investors seek higher yields. Conversely, when central banks raise rates to counter inflation, cryptos come under selling pressure as assets without direct yields become less attractive. The US Federal Reserve. In 2023, the Fed implemented several rate hikes to combat persistent inflation. These decisions dampened risk appetite, leading to a correction in crypto markets. However, the announcement of pauses in hikes allowed for some rebound, illustrating the extreme sensitivity of the crypto market to the Fed's policies. The European Central Bank has followed a similar policy of raising its key interest rates, which has limited access to euro liquidity. The impact has also been felt on trading volumes in Europe, which are often denominated in euros. Some emerging market central banks, such as the Central Bank of Brazil, are adopting a more accommodative approach, which is boosting the adoption of cryptos as a hedge against volatile local currencies. Bitcoin is often compared to digital gold because of its limited supply and independence from traditional monetary policies. However, it remains correlated to risky assets. When rates rise, Bitcoin loses its appeal as a speculative investment. Conversely, during periods of low rates or monetary stimulus, it benefits from strong demand. Ethereum, despite being a speculative asset, is also supported by the growing adoption of decentralized applications and NFTs. Changes in its value are more dependent on overall economic activity in the crypto ecosystem, but the reduction in global liquidity directly affects investments in Ethereum projects. In countries where monetary policies are poorly managed or local currencies are unstable, cryptocurrencies are gaining popularity. Bitcoin, for example, is used as a hedge against hyperinflation in Venezuela or Turkey. Ethereum, meanwhile, is playing an increasing role in remittances and cross-border payments. As cryptos mature, their correlation with monetary policy could decrease. Institutional adoption, technological advances like Ethereum 2.0, and the diversification of their use cases could strengthen their resilience to rate fluctuations. However, in the short term, the market remains extremely sensitive to central bank announcements. The monetary policies of major central banks continue to play a central role in the evolution of crypto markets. Bitcoin and Ethereum, although independent technologies, remain influenced by fluctuations in global liquidity and risk appetite. For crypto investors, following central bank decisions is essential to anticipate market trends.